Charlie, what are you doing?
Didn't you see the economy? It's crashing. We're headed for another depression. We need to bury our money.
What a crazy week in the stock market. On Thursday, we saw the Dow Jones tumble 1,800 points, and we saw in total for the week a drop of 1,500 points. Is this it? Is this the second crash? Are we headed to retest the March lows? Should we be selling right now, or should we play it cool and ride it out? We'll discuss the 4 reasons why we saw this major drop this week and what to expect next. First, the state of the economy. Is the stock market reflective of what's going on in the economy? I mean, right now the NASDAQ is hitting all-time highs. We see the S&P 500 and the Dow Jones recovering back to levels that it was near pre-illness. I mean, that's just crazy. Like, it's totally ignoring the fact that unemployment is at 13.3% right now. There were some job creation in May, which is great. That number has gone down slightly, but still, that's out of control. Personal savings in April were 4 to 5 times higher than normal levels. People, when any money that people have right now, they're not saving. It's not going into the economy. And we're seeing developed countries report GDP loss year over year of 20%. And the World Bank has said that they expect to see over 2020 the world's economy shrink 5%. Now take a look at the stock market. The stock market's not telling you that story. They're saying, hey, things are as good as ever. And what's the long-term effect of all this unemployment? It can't be good. It's going to have a long-term impact. Reason number 2. Fed Chair Jerome Powell spoke this week. And when Jerome Powell speaks, people listen. Overall, he gave a rather grim view of the economy, saying that unemployment rates are high and he expects them to stay high for some time. This is not going to be fixed overnight. He also said he expects interest rates to stay near zero for the next year, 2 years, and just overall gave a grim view of the economy. And again, people listen, and they should be listening. But you could also see maybe an overreaction in the market from just him speaking, and people say, oh no, Jerome Powell said this, oh, time to sell. So I think part of what we were seeing on Thursday and these massive sell-offs was just some reaction to Jerome Powell. And I wouldn't be too worried about that long term. This is just an initial reaction. Reason number 3. Well, before reason number 3, this is a reminder, hit that like button and subscribe. It will help my growing channel, and I will appreciate it greatly. Thank you. So, third reason, the cases are rising. Have you seen the news? This thing, it ain't over. And we're seeing hotspots pop up all over the South. California, Texas, Arizona, North Carolina. Yeah, people are realizing, like, hey, we have not beat this thing yet. And there's panic, and that's understood. I'm not going to speculate what's going to happen next. I don't know. I've been wrong about it all the time. But I can tell you that people are doing a much better job. Overall, society is much more aware of this. And people, I mean, a lot of people are wearing their masks. They're being cognizant of physical distancing. So I think that will play greatly in stopping the spread and also preventing another shutdown like we saw in March and April. I think that it will be a while before society and the economy can function at 100%. But hey, it's not going to function like it did back then because we know we're much more aware. So I have some concern about this, and one day this will go away. But in the meantime, we'll have to deal with it, and it will be a problem. Reason number 4, it's a pullback. In my opinion, it was overdue. I mean, we've seen the past 2 to 3 months an absolutely crazy recovery. People have been riding that wave, making profits, making big money, and we were overdue for a cool off. I mean, it's just been crazy how quickly this has recovered. And yeah, people are taking this time now to cash in their profits. And in my opinion, it's a good thing. Some of these stocks are too high. So now, what am I doing? Well, I can tell you I'm not burying my money in the backyard. But people really did do that during the Great Depression. And but yeah, I take this as a time, as a warning sign saying, hey, this thing, it's probably not over. And I would take a look at your portfolio and say, hey, these are the stocks that do well during this time. This is somewhat unaffected, and these are the ones that are affected. So I'm taking my time to reevaluate my position in these companies that fall into that third bucket. Now, remember back to Q1 earnings reports, they ended up not being as bad as expected. I mean, look back, when did the lockdowns really happen? I mean, mid-March. So really, you're only talking about 2 weeks out of Q1. So how greatly does that impact? Now, come July, companies are going to start coming out with Q2 earnings. This is where you can see a major hit, which could lead to a massive sell-off. So I think right now is a really good time to reevaluate your position in those third buckets. And hey, depending on how long you want to hold on to some of these companies can definitely make a difference whether you decide to hold or sell. But definitely be cautious when it comes to this third bucket, because this thing, as we've seen, it's not over. We don't know when it's going to end. With that said, I hope y'all enjoyed the video. Please like and subscribe if you want to follow me on the journey to financial freedom. We'll discuss anything from economics to business to personal finance and investing on this channel. And if you'd like to reach out, just go to the comment section down below.